Let's take a look at the global market highlights and news for March 28, 2014. Markets give up year-to-date gains. Citigroup tumbles as Feds reject bank plans, and the New Zealand dollar continues to climb. Let's see what's happening in the global markets now. As the month comes to a close and winter is over, traders are expecting big things for the U.S. market. Wall Street moved between gains and losses in choppy trading Thursday, while the Nasdaq Composite Index extended recent declines to near two-month lows. U.S. stocks fell, erasing most of the S&P 500's year-to-date gain, as banking and technology stocks led to the sell-off. The benchmark S&P 500 turned nearly flat for the first after falling almost 1% this week, as many of the market's biggest trading favorites lost their momentum. The Dow Jones dipped 4.76 points, or 0.03%, to end at 16,264.23. The S&P 500 lost 3.52 points to close at 1849.04, and the Nasdaq dropped 22.346 points to finish at 4151.232. At the close, the S&P 500 was up just a fraction of a point for the year. Citigroup tumbled 5.4% to 47.45 a day after the Fed rejected the bank's plan to buy back $6.4 billion in shares and boost dividends, saying that Citi wasn't sufficiently prepared to handle a potential financial crisis. A source close to the matter told Reuters that Citi officials had not expected the rejection. Big tech names also dropped, including Google, off 1.6% at 1114.28. Microsoft was down 1.1% at 39.36, and Amazon was down 1.4% at 338.47. Twitter's market value continues to disappear. Simply put, it seems that investors have come to the realization that the company may not be the next Facebook or Google after all. Even though it seems like you can't turn on the television or go online without some promotional hashtag hitting you in the face, hashtag March Madness, Facebook has more than 1.2 billion active monthly users. And that doesn't include Instagram or any new users it may acquire when the What's Up purchase is complete. Twitter has only 241 million active monthly users. Google Plus has more than twice as many as Twitter, with 540 million. Okay, the Stoxx Europe 600 edged up 0.1%, adding to a 2% rise in the previous two sessions. Asian markets were mixed, with China's Shanghai Composite losing 0.8%, while Japan's Nikkei stock average rose 1%. In the foreign exchange market, economic data was mixed. Pending home sales for February fell an eighth straight month versus expectations of a slight increase. Meanwhile, weekly jobless claims declined to a 4-month low, while economists forecast a slight rise. And fourth quarter gross domestic product growth was raised 2.6% from a previous estimate of 2.4%, just missing expectations of 2.7%. The euro struggled near a 3-week low against the dollar on Friday, weighed by recent dovish talk from several European bank officials. The New Zealand dollar continued its bull run, hitting 2.5-year high against the greenback and a 6-year peak versus the yen. The euro last traded at 1.3744, having touched 3-week lows of 1.3728 overnight, on track to end lower for a second straight week. Against the yen, the common currency stood 140.41 yen after slipping to 3-week lows of 140.19. In the commodities space, gold trimmed a second weekly loss as investors weighed speculation a drop below $1,300 an ounce will spur demand against signs of a U.S. recovery, which may add to the case for tapering. Platinum and palladium advanced. Crude oil headed for a second weekly advance amid shrinking stockpiles at the U.S. oil storage hub in Cushing, Oklahoma, and concern the crisis in Ukraine threatens supplies from Russia. The contract gained 1.02 to 101.28 yesterday. This is Amy Anderson from Option Rally signing off, and of course, I'm waiting for your like below if you enjoyed today's Market Watch. Have a great weekend.